So thank you very much for joining this live session, and straight away we're going to talk about the broader economic issues we're facing. And non-economists usually have only a vague idea of how monetary policy is supposed to work. It is much harder, after all, to ascertain what a 75 basis point rate rise really means than to interpret the price of petrol or gas displayed at the gas stations. This gap in perception matters, as Powell himself knows only too well. One reason the Fed hiked rates this week is that tangible consumer price data that emerged last Friday, the 10th of June 2022, shows an annual inflation rate in the US of 8.6%. However, the second big and less noticed trigger was that the data from last Friday also delivered what is supposed to be saying that 5.4% and 3.3% inflation rates over the next 1 and 3 years respectively, which is a sharp increase. Some economists might retort that the public tends to be very bad at forecasting. Fed officials usually appear to agree. The governor's dot plot forecasts created with underlying technical models of supply and demand imply marked future falls in inflation rates. One hopes the models are correct, but the problem with inflation, as legendary Fed chair Paul Volcker once observed to his friends, it is that it can easily take on its own life. In other words, expectations become self-fulfilling. Or put it another way, Powell is just waging a battle in the markets, but also with consumers' minds, and that second fight is becoming increasingly challenging. To understand why, consider the behavioral economists such as Mayer Statman. So let's find that guy. Let's find him, Mayer Statman. He delivered a symposium, behavioral finance. Mayer. That's him. So he recently delivered a symposium. Okay, he was saying that he studied the psychology of price rises around the world. Okay. And in an inflation symposium in New York this week.
Meet overlay.
Sorry about that. So this guy, Mayer Statman, he delivered a symposium in New York this past week, considered around consumer reactions to price trends. And according to him, they are often distorted by 5 psychological factors. One is framing. It says since consumers normally rely on yardsticks like prices to break down economic trends, they feel they're thrown out if inflation distorts the dollar yardstick. Thus, they often succumb to the so-called money illusion, where they only focus on nominal prices and rates, not real inflation adjusted ones. So they become the money illusion comes in, where they only focus on nominal prices and rates, not real inflation adjusted ones. Second factor is fear, which is fueled by disorientation. The third is availability, or the ease with which data can or cannot be seen. And the fourth and fifth issues are confirmation and representativeness. Shortcuts. These include a tendency for people to only notice information that fits their pre-existing ideas and to interpret data by extrapolating from the recent past into the future. All five patterns matter right now. The speed at which inflation has surged has disorientated many people. Moreover, consumers are being bombarded by some highly available, that is, visible numbers, such as 60% year-on-year rise in prices. It is natural for them to use that as a proxy for the wider inflation rate, however inaccurate, and projected forward out of fear. You can see that 60% year-on-year rise in petrol prices. Some people might actually conclude that to be the rate of inflation, and these are real observations. Then there is the confirmation bias issue. According to a Pew survey released in May of this year, it showed that 70% of Americans view inflation as a very big problem, topping other concerns by a wide margin. However, there's a stark partisan split. Although 84% of Republicans are alarmed about inflation, only 57% of Democrats are. Never mind that they presumably face the same price rises. It is easy to explain this. Republican leaders are constantly talking about inflation because they want to attack the White House. That in turn shapes consumer perceptions. This matters as Robert Shiller, another behavioral economist, notes. The narratives we spin for ourselves about the economy not only reflect economic reality, they shape it in a self-fulfilling manner, even if those narratives do not match macroeconomic models. So what can Powell do? On Wednesday, he tried to reframe the popular narrative by constantly altering the phrase price stability and stressing the Fed's commitment to it. However, he also acknowledged that the central bank is now tracking the so-called headline inflation, that is the gross number which reflects consumers' spending, instead of just core inflation, the seasonally adjusted figure that it typically prefers. This is a sign that the Fed knows public perceptions are important, but the hard reality is that Powell will struggle to win the battle of people's minds, never mind the markets. While petrol at $5 a gallon is still a readily available number, moreover, energy costs cannot be controlled by 75 basis point rate rises. That is why he is now determined to keep wage growth under control, even at the cost of higher unemployment. And that is why America is probably sliding towards a bout of stagflation, even if this is not a word that Powell himself would use. Okay, let's quickly return to stocks. Let's see. Enough of the economics at the moment. Let's look at MULN. MULN Automotive is unchanged, just down 1.6% in this pre-market session. So what do we have? Is there any news there? Still about those litigations. Still about them. Nothing much. Let's get the volumes for MULN. 426,773 shares have crossed the tape. Okay, let's quickly have a look at IMPP. IMPP is up 9.21% in this pre-market session. Is there any news? Just a couple of disclosures yesterday. There isn't any current news at the moment. Okay, the company declared dividend on Series A preferred shares yesterday as well. Volume so far 1.363 million shares. ATHX, ATHX Inc. up 43.8%. Let's get the news. It's on the move. Up 44.95% now. There isn't any news. The news might filter through later on. 10.602 million shares have crossed the tape. Penny stock on the move. Is it optionable? Let's see. Optionable penny stock ATHX gained 44.95%. We don't know the news yet. ELMS, electric last mile solutions, up 29.43%. Okay. It was a pre-gunner yesterday as well. Today we don't have any fresh news. Penny stock as well, optionable. 4.126 million shares and counting so far have exchanged hands. Let's see what's going on with XELA. XELA Technologies up 9.12%. Is there any news? No news. XELA is a penny stock, optionable as well. 2.514 million shares have crossed the tape so far. Okay, let's see whether we can get a few targets, some targets for some of these stocks. IMPP. Okay, it in this pre-market session it has it reached this high of $0.65. Okay, so let's take this 0.61 and 0.59. Just a difference of 0.02. Plus 0.5917. So target of 6.44. 6.44 is around where it reached 0.44, so it has a prospect of rebounding to that sort of level, but don't bank on that. Revlon, let's see. Revlon is on the news as well. I think we have some news concerning it. Revlon up 80%. Let's see whether we can get the news for Revlon. Okay, they're saying here, according to the Financial Times, Wall Street can only apply so much cover up and blush to a broken capital structure. US cosmetic maker Revlon, long backed by financier Ron Perelman, has filed for bankruptcy protection. Okay, so Revlon has filed for bankruptcy. Okay, that could be why it's on the move. The tumble as the Federal Reserve raised interest rates. The tumble as the Federal Reserve raised 0.75% marks a switch from an easy money era to a time of less lender means. Ongoing inflation and supply chain blockages forced Revlon to succumb to liquidity and leverage problems common to financially over-engineered businesses. The company generated $58 million of EBITDA in the first quarter. Still, Revlon has a total debt of more than $3 billion. It must reduce its enterprise value by slashing leverage, which is likely to wipe out public shareholders. Perelman owns about 80%. The company has not kept up with beauty uptrends. Upstart brands have won over younger generations. Revlon's reckoning was delayed by acquiescent capital markets. These allow the company to raise more cash, exchange existing paper for extended maturities. Numerous US companies have followed the same path. Many will now continue in Revlon's footsteps, asking a bankruptcy court to oversee a messy fight between creditors. Revlon is best known at present for a bizarre banking snafu. Citibank, which oversaw a large loan for the company, accidentally repaid $900 million of principal balances in 2020 when it meant to make an interest payment. Yeah. A preceding episode matters more as an emblem of the financialization of US business. Revlon, desperate for cash, has issued a new $1.8 billion loan. Buyers of the loan received a collateral Revlon intellectual property that had already been pledged to senior creditors. Collateral stripping have become commonplace in recent years, with varying legal success. Such deals give companies like Revlon a long shot chance of turnaround, but Revlon would have been better off taking a hard look in the mirror years ago. So it's a bankruptcy case, and market participants are making the most of it. We have seen of late what's going to happen. It's rallying now, gained 83 points. Strongly rallying now, so let's see whether we can get a short interest on this stock. If it has a short interest, then maybe it has to be watched. But this is not an advice that you should buy it. Okay, short interest of 38.44%. You can see why market participants are following it. Revlon. Pushing it higher and higher. Okay. So let's plot a Fibonacci grid, and maybe when we come back we might see something there. So the 100% extension level, which is where it is right now, is based on what it has done so far in this session, is at $35.59. So we'll give it some time and see how it extends, and that way we might be able to pick up any possible projections from here. So let's quickly have a look at ATHX. ATHX up 43.86%. It's retracing. Let's see whether we can get a projection here. Take 0.4749 and current price. Okay, take 0.46, 4749 and 0.46. Okay, multiply that by 2.618. and we add that to the current price of 0.4621. We have 0.5 for ATHX. There's no guarantee that it's going to get there. Has it reached there at some point? Yes. It has. At some point in this session it was at 0.5232. So let's look at next one is ELMS. Electric last mile solutions up to 4.14%. Let's see whether we can get a projection from here. 3648 and 3519. So 3648 3519. Multiply that by 2.618. Add that to the current price of 0.35. We have 3837 for ELMS. Okay, so the gain for that stock is currently 23.4%. Let's look at XELA. XELA is up 13.26%. Let's see whether we can get a projection here. Strongly bullish and extending. We haven't found any news, so we take 0.16 and 0.15. 0.16 and 0.15, so that's just roughly 0.1, 0.16, 0.01 multiplied by 2.618. Add that to 0.1612. So 21. We have 0.18 for XELA. Okay, so so far these are some of the stocks that are on the move in this pre-market session, and I'll catch you all later on, maybe just before the session ends.